Sure thing. Well, good morning, everybody. Thank you for having us here today. Before I get started, President Oliver, I just heard and read about your election to City Council President. So congratulations to you to start.
Thank you, sir.
Um, and with that, we'll go ahead and get into the deck. So what we're going to be overviewing here are just some high-level financial highlights of the ACVR, getting into some of the work we did around the management letter, as well as our special projects. And then we'll conclude with some upcoming standards that would impact next year's annual comprehensive financial report and talk about a planning date. So with that, I'm going to go ahead and turn it over to Zach. Zach, do you want to go ahead and share the screen and get started?
Sure thing.
Okay.
Do you want to let me know if you guys can see the screen?
Yep, we got it.
Perfect. So, like Jim said, we're going today go over the financial statements in a high level. We'll certainly go over the management letter as well, and then we're going to talk about our next meeting and what should be um, available for the next meeting. So, jumping right into it, the city did receive an unmodified opinion, which is consistent with prior years. This is the best option that, or best opinion that you can receive from an independent auditing firm. One thing that we did want to bring to your attention is there's a slight addition from the prior year, and that's going to be the emphasis of matter paragraph. And that was due, it needed to be included for the implementation of the Governmental Accounting Standards Board Statement number 101 for compensated absences. It didn't have any impact on the opinion. It's still a clean opinion, but wanted to bring that to your attention that there is a new paragraph in your independent auditing report for this to bring the impact of the GASB 101 to the attention of the readers.
Hey, Zach, just to jump in here, the addition of that paragraph, it's not uncommon for situations with other communities that are adopting this standard and have a restatement at the beginning of the position with this adoption. So just want to throw it out there. While it's new for this year, it's not uncommon in similar situations that we're seeing. And again, no impact on the clean opinion.
Thank you for that clarification. Oh. So going into some financial highlights. So we're going to start with your governmental wide financial statements, which is really the long-term financial view for the city of Newton. And in your statement of net position, you have liabilities of about 1.2 billion. The primary of the chunk of those liabilities are your long-term liabilities. So your bonds payable came in at 368 million. Your net OPEB liability was largely unchanged from the prior year and has a balance of 461 million. Your net pension liability had a liability of 264 million, which is about a $32 million decrease from the prior year. And that decrease is primarily due to the investment income that the contributory retirement system saw during calendar year 2024. And then you have net position of 286 million. You can see the breakdown of those items, but that last item, that unrestricted, has a balance of 732 million. It's actually a $116 million decrease from the prior year. And that decrease is primarily due to the amortization of some prior year deferred inflows in relation to your OPEB liability that are being reflected in your income statement in this year.
Real quick, if you're okay with just a quick question right there.
Absolutely.
Do you have visibility into the difference in investment strategies behind OPEB and net pension funds in terms of if, for example, I guess what I just heard leads me to think that the interest earned on one account is doing better than the other. And maybe that's not entirely accurate either.
I think it's also important to recognize the different measurement dates for the two. So for
Okay.
your retirement system, that investment income is going to be analyzed between 1/1 and 12/31 because your retirement system has a year end of December 31st, whereas your OPEB is going to be analyzed between 7/1 and 6/30. So there's about a 6 months difference. So it's really not, I think, appropriate to really compare one to the other given that 6 month difference on either end. They certainly share a common 6 months, but it may be a bit misleading to say, well, one fund had a investment income of X and the other had Y when they have different measurement periods.
Okay. But okay. And do you have visibility into the investment strategies given the reports that you were provided? Like, is that information in there? Like, if I want it, if I find the hour to go and figure the answer out to my own question, is it in there?
It is. So there is a long-term view, and I can maybe pull that up. Jim, do you have the page
I
by any
don't I don't
chance?
necessarily want to derail the
Oh, okay.
conversation for that, but if it's in there, I'll take that offline.
It is in the note disclosure for both the pension and the OPEB and what the long-term investment strategy is for both funds.
Great. Thank you.
Can
You're very
I
welcome.
can I just add that they are both invested in the Mass Prit Fund, so the Pension
Okay.
Reserves Investment Trust.
And
They're
do
both.
sorry, Stephen, so does that mean they're consistent in terms of the strategy and the application and so forth? More or less.
I would say yes, more or less.
Okay.
I haven't looked in the granular detail. We
Okay.
rely on them, and they invest in different ranges. And they actually meet with the retirement board a few times a year and go over what percentages are in what buckets, whether
Perfect.
it's timber or REITs or whatever it is, and they go over their whole investment strategy.
Great. Thank you, sir.
You're welcome.
So looking at your statement of activities, which can largely be thought of as the income statement for the long-term financial view for the city of Newton. Again, you had an increase in net position of about 128 million, but again, that's largely due to the amortization of prior year deferred inflows for your net OPEB liability. Your total expenses were 529 million, but the biggest chunk of that was your education with 353 million, about 67%. Your total revenues and transfers were 657 million. And then your program revenues, which is your state aid, your grant, your gifts for education, that was about 88 million of that. And then your general revenues and transfers was 479 million. And what the biggest chunk of that was your real estate taxes, and that made up about 439 million of that 497 million. For your governmental fund statements, your general fund balance sheet. So this is more of the short-term financial view for the city of Newton. You had fund balance of 137 million. And if you go to page 72 of the act, you can kind of see the breakout and the detail of what makes that up. But I really want to focus on that last bullet point, which is your unassigned fund balance. And that had a balance of about 70 million. And that includes your stabilization fund for 27 million. And what this represents, this total unassigned fund balance represents 12% of total revenues. And that's an increase from the prior year. It was at 11.3% in the prior year. Now, the Government Finance Officers Association, they recommend about 2 months or about 16.7% as a ratio. So the city of Newton's a bit below where the GFOA would recommend it to be, but it's by no means a bad financial position or something to be concerned about. It is still a good financial position. It's just slightly lower than where the GFOA would recommend it to be.
So they're actually recommending that we park more cash that is effectively untouchable in an account that earns interest.
I wouldn't say cash, but it can be, I guess, thought about as cash. But it's not just your stabilization; it's your general fund unassigned plus your stabilization would make up that unassigned fund balance.
Fair enough. Thank you.
So, in a sense, if I can add in there, something like budgeting more conservatively, where we're going to have higher revenues over expenditures, which lead to the undesignated fund balance and ultimately a higher free cash number, which is certainly touchable after it's certified.
Yep.
That's your other use there.
Interesting. All right.
Staying on the general fund, your statement of changes in fund balance or the income statement for the short-term financial view for the city of Newton had a change in fund balance of about 9.1 million. And that can be explainable through the budgetary versus actual results of operations. So the city used $60 million of prior year carry forwards in reserves during your budgeting process for fiscal year 25. But then you had turnbacks on both your revenue and expenditures. So for your revenues, you had revenues that came in greater than what you anticipated by 22 million, and you had expenditures that came in less than what you anticipated by 47 million. So if you take that 22 million plus the 47 million, it's about $69 million. So you exceeded you beat the budget by 69 million, but then you utilized your fund balance of about 60 million, which is why you see that $9 million increase in your general fund balance at year end.
And Zach, looks like Julia's got her hand up.
Yes, Julia.
You're
You're on mute,
muted.
Julia.
Julia, you're still muted.
Okay, sorry. I need to get unmuted on my laptop. Okay, all right. Thank you. Now I guess the other one down. Okay, I have a mute. Okay. I had a just back on the slide before real quick. Do we have a comparison of where we stand to other comparable to our comparable towns on the percentage of revenues number?
I don't have that readily available. That is something that we could look into,
Okay.
but not something that I've got readily available, Julia.
Okay, sorry to, okay, you can go move ahead now.
Go ahead, Alex.
Yeah, also just a kind of quick question going off of that. Do you expect that the guidance is going to change at all for kind of what percentage in reserves that are going to be recommended given changing landscape, or is that something changing economic landscape, or is that something that generally remains unchanged year to year?
For my tenure in this industry, I've not seen it changed. So I'm unaware of any plans to make that change by the GFOA at this time.
Okay, perfect. Thank you, Zach.
You're welcome. Julie, do you have another question or
No, that's
hand up
it.
from previous? Okay.
Previous.
So moving into your proprietary funds or your enterprise funds, your water, sewer, and I believe stormwater. So your sewer enterprise had liabilities of about 22 million and had net position of 25 million and a change in net position of about 5.3 million. For your water enterprise fund, it had liabilities of 38 million, a net position of 79 million, and a change in net position of about 6 million. And then your stormwater enterprise fund had liabilities of 6 million, a net position of 14 million, and a change in net position of about 1.8 million. For your internal service fund, which is your health insurance and your workers' compensation, that had liabilities of 23 million. And the breakdown of that is your IBNR, which is your incurred but not reported health claims of 11 million, and then your workers' compensation liability of 12 million. And then you had net position of 23 million, and the breakdown of that is your health insurance was 14 million of that, and then your workers' compensation was 9 million. And then you had a change in net position of about $4 million for your internal service funds. So your health insurance net position is about 2.2 months of claims, and the city targets between 1.5 to 2 months of claims. So you're just slightly above where the target is. But so I'd say that that is a good financial position for the city of Newton to be in. Gives you a little bit of flexibility. A little too far there. Moving on to your fiduciary funds. And the first one we're going to get into is your pension trust fund. And you can see the breakout for your pension trust fund on pages 77 and 78. On the fiduciary statement and net position, they're going to be presented as just one in one column. So your statement of fiduciary net position for your pension trust fund had a net position of 587 million, which is primarily consisting of your cash and in your investments. And then the statement of changes in fiduciary net position saw a change in net position of $55 million. And in the prior year, there was an increase of 57 million. So pretty comparable to last year. And again, the big driving force for that change in that net position is your net investment income of 48 million. And again, last year you had an increase of 51 million from your net investment income. So you can see that that change in net position is really driven by that the change in net position is really driven by that change or that net investment income. And we'll talk about that liability in a couple further slides. Your OPEB trust fund had its net position of 47 million. And then it saw a change in net position of 8.6 million. The city made 28 million in contributions this year. So your actual contributions to the OPEB trust fund was 5 million. And then your gap accrual, or the pay as you go, was 23 million. And then you saw investment income of about 3.9 million. Your long-term debt. So your total long-term debt for the city was 409 million. But what I really want to focus on is your new debt. So there was $86 million of new debt issued for your governmental funds and $1 million for your stormwater. And I want to pull up, maybe give you a quick breakdown. Page 59. The largest projects were for the new Cal construction. That was about $15 million of new debt issued. Your Lincoln Elliott Elementary School renovations was about 37 million. And then your countryside school construction was about 20 million. Those are the three largest projects that made up that $85 million of new debt that was issued in fiscal year 25. For your OPEB liability, as of June 30, 2025, that liability is 473 million. It's again a slight increase from the prior year of 466 million, but largely speaking, largely unchanged. And then down below is some sensitivity analysis that shows you the change in the liability if you were to change some of your assumptions, whether it's on the discount rate or the healthcare expense trend rate. Similarly, with OPEB, the liability was 276 million, and that's a decrease from the prior year. Last year, you had a liability 308 million, and that decrease again is primarily due to those positive results of investments that occurred during calendar year 2024. And just like OPEB, there's a sensitivity analysis that shows you the impact on that liability if you were to change your assumptions with your discount rate, and what would that impact be on that. Moving into the management letter. The first comment that we had in the management letter is a repeat from the prior year, and it's the general ledger integration of the police details. So currently the system is not integrated with the city's general ledger. So we're recommending that the city continue the process of Munis General Building and move forward with the integration of police details when appropriate. And just wanted to give you a status update on this item. The owner of DQH sold the company, and that was the vendor that the city was working with for police details and getting it integrated. And that caused some delays in the integration. So the police department transitioned to a new company, which is called On Duty, who the city has engaged with for previous projects. And the police chief is cautiously optimistic that that integration will be complete by the summer of 2026. The second recommendation we have is for the information technology. So the city does not perform an analysis on an annual basis for the user rights of those users of Munis and see what those access rights are. And then additionally, the city doesn't have a disaster recovery plan. If a disaster were to happen, and how they would handle that disaster if there was a cyber attack or something along those lines. So what we're recommending is that the city perform an annual review of the access rights to all users within Munis to make sure that those access rights are appropriate. And then additionally, we're recommending that the city develop a disaster recovery plan with the elements that were more defined in the management letter. Alex, you have a question?
Yeah, I'll wait till you're at the end of the slide.
Okay, go ahead.
All right, perfect. Yeah, so as I was kind of reading through this issue here, it kind of brought up in my mind just the broader kind of IT and digital technology risk facing the city. So this is a finding that's been, goes back to, even just from my searches, 13 years. That was at least in 2012 was the first time that saw it get brought up. So just kind of with that in mind, just kind of wanted to get a broader understanding of really what sort of digital technology risks you guys really included within your scope that you guys tested and were really looking at. And if you saw any other areas, for instance, anything from like segregation of duties all the way down to just general IT security risks that you guys were looking at.
Jim, do you want to step in here and maybe talk about it from a broad standpoint?
Sure. So Alex, in the scope of the financial audit, our audit is mainly focused on two components, one being the key financial systems of the city, which is Munis, and then the other being the network of the city as a whole. So I wouldn't say that our scope it digs into the digital technology in every system being utilized by the city, but more related to just the Munis component and the network component. So with that, our primary goal through testing the information technology controls is to get an understanding of what controls are in place and the policies are in place. From there, we'd also look into the we would obtain an understanding of the policy, then from there request additional documentation plan. Okay, you have your policies implemented. What sort of internal testing did you perform during the year? Such as did you perform your internal testing, your external penetration testing? Are you performing a risk assessment? So really just focusing on the high level policies design and then testing the implementation with documented evidence. So I wouldn't say it's all encompassing of all the digital technology across the city, mainly focused on network, financial software, and then testing, design, and implementation. Does that help clarify?
Yeah, it does. And I figured, yeah, it would, of course, it would be probably more F&O based than DT based, just based on the nature of your work. So yeah, with that being said, were there any other sort of areas within your testing that you really saw any sort of risk, or was it really just kind of on the disaster recovery plan that it was really just kind of singled in on?
Really, just these two, and I would say that in other cases, it's not necessarily an uncommon comment about the disaster recovery plan. It's just I think what we're seeing in the general IT environment with instances happening is that even, and that's not just hacks. I mean, we're talking physical disasters as well, environmental disasters. Just having a documented plan in place if anything were to happen, so that the city can execute on what it needs to it's something where we felt it's significant enough to call to attention, but otherwise, no additional significant risk to come up.
Perfect. Thank you. That's good for now.
Thanks, Alex. Looks like Carl has a question as well.
Carl, yeah.
Yeah, just one other follow-up on this disaster recovery. Do you know, is the city using the Munis cloud for its for that system? Is it a cloud-based system now?
Understanding is yes, Steve, if you could correct me if I'm wrong.
Yes, it is.
Yeah, so I wouldn't get. I agree there needs to be a disaster recovery plan, but Munis is backing up, if not daily, hourly. So all of your financials are backed up in the cloud. So not, I don't disagree with your recommendation on a recovery plan, but knowing how Munis works, I think it's a lot better than the Munis of 15 or 12 years ago when you probably first looked at that finding when Munis was residing within the city's network. That's no longer the case for Munis users today.
Yeah, and I think Carl, if I may, not to pile on or anything, but I do know that uh, there was a lot of work done over the past 3 to 5 years by IT, not only with our previous director of IT, but Greg and Saldi as well, to not only migrate from on-prem to cloud, but there were a few other systems that were considered to be. I remember this from their presentation. I don't know how or why, but I remember them saying they sunset several systems that they felt were duplicative and introduced the potential of risk from a security perspective. And if I will say that, I'll go as far as to say I think that Greg and his predecessor have done a pretty significant amount of work on security. And again, to agree with Carl, I do think a disaster recovery plan is important, but I do think that they've done a fantastic job of kind of mitigating that opportunity, at least from external threats. But anyway, point well taken, I think is the point.
Right. And Carl President, thank you for the input there. Wouldn't disagree with anything that's come out of that. The cloud-based, where it's backed up, it does strengthen the likelihood of successful financial recovery. This comment is more along the lines of a tangible plan to work with in the event anything that impacted the city's network, which would even go beyond the financial system and some of these other systems as well. But I feel those are fair points. It looks like Julia has her hand up.
Yeah, just along those lines. So the data itself is backed up, but would a disaster recovery plan include sort of procedures for people to follow in the event of something like that happening? I know we have when there's sort of a planned shutdown of something to do a process, or there's kind of warnings going out and employees are prepared for it. But in the event of something unexpected happening, unplanned, would a disaster recovery plan include kind of the people side of the process?
Yes, that's exactly what we're aiming at. Is what needs to be executed on in the event of these disaster recovery. So that's yes, exactly those responsibilities would be described.
Okay. Okay. Thank you.
Yep.
Go ahead, Steve.
Thanks. So I know Chair Maliki had asked me to reach out to IT to get a response, and I know we normally have a formal response to this management letter, but I have a few. So it's a bit extensive, but essentially a draft response from Greg. If you want me to read the response to the management letter, it will be formalized as we always do, but. Thank you,
Okay.
Chair.
Yeah, that would be helpful, I think.
So he said regarding the recommendation to implement a regular review of user access rights to the general ledger software, we currently have several procedures in place to manage and monitor access. However, we recognize the importance of formalizing these practices. We are actively working on developing a formal policy that will incorporate our existing controls, including annual reviews of user access to ensure alignment with role responsibilities and prompt updates following personnel changes. This review process will be documented to ensure transparency and accountability. And then to the second piece, and I can't really follow up with any comments on these outside of what he said because it's a bit over my head. But in response to the recommendation to develop a comprehensive disaster recovery plan, we would like to note that the City of Newton already maintains documentation covering all the key components outlined in the audit. Identification of critical information systems and data. We have detailed documentation identifying our critical systems and data assets, along with procedures for managing points of failure. Regarding backup and recovery procedures, step-by-step instructions for backup and recovery are in place and actively used. We are currently working on formalizing these procedures into structured policy that includes a defined schedule and contingency actions in the event of backup failure. Regarding roles and responsibilities for IT disaster response are clearly defined within our internal documentation. Communication protocols. Established communication procedures are in place to ensure timely and coordinated responses during IT incidents. And regarding testing and maintenance procedures, while we conduct regular testing and maintenance of our systems, we are in the process of consolidating these practices into a formal disaster recovery policy document. And then he ends it with saying, we recently developed and adopted a formal incident response policy, which complements our disaster recovery efforts and reflects our commitment to continuous improvement in IT risk management. So that was a mouthful. Hopefully you all got a good grasp of it because I can't really add much to it.
What was that part in the middle? Kidding.
Okay, moving forward. I just want to give you guys some updates on the special projects that were performed. So on the city side of it, we visited with the Gath Pool in Crystal Lake Beach, and we performed a walkthrough of the internal controls over both revenues and expenditures. And we conducted this with the Deputy Commissioner of Parks and Recreation, as well as the Aquatics Manager. And then we tested a sample of deposits from the source documentation that's maintained by the Parks and Recreation, and then trace it all the way through the general ledger without exception. We had one verbal recommendation there. Didn't feel like it was necessary or raised to the level for inclusion in the management letter. But both the aquatics manager who performs the daily cash out at the end of the day, and then the administration manager who reviews that daily cash out the next morning, they're not documenting their work. They are performing the internal controls correctly, but they're just not documenting their work. So what we recommended was for both of them to sign the source documentation that they're maintaining on their level to show that, yes, the aquatics manager did perform the cash out, and yes, the administration manager did perform the review. They are both doing that. They're just not documenting it. So it was just a verbal recommendation of a documentation item. On the school side of the equation, we did a walkthrough of the school building revolving fund. And again, similar to the Gath Pool and Crystal Lake Beach, we did a walkthrough of the internal controls over both revenues and expenditure cycles. And we met with the director of facilities, the business operations coordinator, and the executive assistants of facilities. And again, similar to the city side, we did a test of deposits and traced it from the source documentation through the general ledger without exception. And then additionally, we did some work over circuit breaker. So we just looked at the expenditure side of circuit breaker, and we tested a sample of expenditures to make sure that they're in compliance with the DESC guidelines. And again, no exceptions were noted there as well. So moving on to some new GASB standards that are going to be applicable for your June 30th, 2026 audit. So you can see kind of what's coming down the road. And the first one is going to be your Governmental Accounting Standards Board Statement number 103, which is the financial reporting model improvements. So what this is really going to change, and if we really want to focus right in here, it's really going to update disclosure guidance for your management's discussion and analysis for some consistency. It provides a clearer definition for unusual or infrequent items. It's going to change the presentation of your proprietary fund financial statements or your water, sewer, stormwater, internal service fund. It's going to slightly change that presentation. It impacts the major component unit information as well as your budgetary comparison information. Jim and I were talking, and we don't think it's going to largely change your budgetary comparison information. It really just moves it to your required supplementary information. The city already presents it in required supplementary information, so it shouldn't be a change for you on your budgetary comparison.
Thanks, Zach. Just to circle back a couple other specifics as far as impacting the city. Like we don't see these things as relatively minor changes in the grand scheme of the city's overall act. For I think when we look at it, the standard for the management's discussion analysis is just basically codifying the specific elements that need to be included there. We don't see it having a dramatic impact, but it's just going to be limited to specific elements that GASB is going to require in the MD&A. As far as the other impact, the presentation of proprietary fund statements, the clarification here is the reporting of subsidies that these enterprise funds receive from other governments or the MWRA. So just clarifying where those need to go in the operating statements. It's nothing that'll result in like a restatement or anything like that, but more just clarifying the line items that those types of subsidies need to be reported in. And like Zach had mentioned with the budgetary comparison, main change here is that rather than presenting as part of the main financial statement after the governmental fund statements, it's now going to get moved over to the required supplementary information. So just wanted to highlight some more specifics as far as how this will impact the city, something that CLA will work with the city on as the ACFR is being put together for next year.
Thank you, Jim.
Thanks.
The second accounting update is going to be for the Governmental Accounting Standards Board Statement number 104, and that's for certain capital assets. And it's going to clarify how capital assets are disclosed in your financial statements, and that's going to be in relation to capital assets held for sale, leased assets, subscription assets, the right to use assets, and any other intangible assets. Again, CLA is going to work with the city to help with this presentation disclosure. Again, don't anticipate any major impacts from this Governmental Accounting Standards Board's implementation.
And Zach,
I'll
take it over from this just because there's a couple of catch-up items I want to go over. If you could, so with this slide here, specific to the city, Gatsby's intention here, some of these assets that are listed, it's just codifying how they need to be presented. So the city's reporting these assets is already pretty consistent. I think if we're looking at an asset category, we're probably looking at those capital assets held for sale that may result in some reporting changes. But otherwise, I think we'll see a pretty consistent statement next year as far as how these assets are considered. So I just wanted to add that. The other piece I just wanted to go back to, Alex had brought up a question as far as the comparability of the fund balance in relation to other communities. So just looking at it from the S&P side as well, their recommendation in the credit rating analysis is that 12% of the reserves in comparison to the other financing sources and revenues, like the 12% is the recommended figure, whereas the city is slightly over 11, so relatively in line with that benchmark. The other ratio they call attention to is a healthy percentage of total general fund balance in comparison to revenues and other financing sources between 15 and 35%. The city is currently at 23.7%, so you're in line with that benchmark comparison. I'd say that 23.7% is fairly consistent with many of the other communities that we work with. So I wanted to catch up and give a little more detail into Alex's question from earlier on. So you can go to the next slide, Zach. So I think we're at a point where we're talking about the April 2026 timeline, meaning to discuss the results of the 25 single audit, and then we'll get into the 26 audit planning. Last year, the date assigned was Wednesday, the 9th of April of 25. Similar timing would put us on Wednesday, the 8th of 2026. And that will conclude our presentation, and we can get into scheduling unless there's any other questions.
I had a question back on I just wanted to understand that adjustment from last year's Gatsby 101 related to the, I guess it was unused time off.
Yep.
Did that help us, or it seemed like, was that the 7 million adjustment that I saw somewhere?
Yes.
The restatement of the a year ago balance.
Yeah. So when we look at it in the grand scheme of things, it is the compensated absences are an estimate. So when the city had dug into the data for this year and considered the new measurement requirements, that 7 million is what was recalculated as the change in the estimate from if it was applied to 2024. So generally the answer is yes, it would have helped in this case. That the way we look at it is that it's not, it will improve the June 30th, 2024 net position. But I think the focus for this year is those additions and deductions to the measurement that get you to your ending balance for this year at 2025. So it's more so just related to a change in the measurement.
Okay. Was it that we were being more conservative than we needed to be in estimating?
It generally, yes. There was a lot of data that was looked into and considered as part of the estimate, though, and in that piece, I wouldn't have, as far as being able to dig into every element, I wouldn't have that readily available. But generally, yes, it's just looking at it, what the GASB required versus the city's prior year estimate. That the new estimate is generally, I wouldn't say less conservative, but more in line with the trends of the usage of sick and leave that has been used over the last few years.
Okay. And then, so now we're on track with presumably more accurate, realistic estimates for current conditions. Is that basically what happened?
Correct. So we have to look at the city has to look at the trends over the past few years, and just looking at the historical experience, that 7 million is what shook out for 2024. So
Okay. Thank you.
Yep.
Oh, back to the date. So I think August 8th, I think looks fine.
April 8th.
April 8th, rather. So 8 a.m. then?
No issues on our end.
On my personal end, but it's April, and I'm more worried about next week. So April 8th, 8 a.m.
It's not marathon week. It's not school vacation week.
Right. It does. Yeah, it doesn't appear to be. It is the day before my sister's birthday, so I'll have to check in with it. No, kidding.
No issues with me. I know, I don't know if Alex had any concerns because he had sent the email late yesterday about trying to push up that meeting.
Yeah, well, I would say that my email was different because I know for this meeting, this is specifically for meeting with CLA. So I was gonna wait till after. But yes, I do think although the makeup of the committee is obviously going to change with the counselors that are sitting, I do think that it would be prudent just to take a look at some of the other work that the committee is has in our charter to be able to kind of meet, talk over some of those issues. It's been quite a while since we've kind of sat not with the auditors and just kind of sat as a committee. And I do think that it would be prudent to do so once the new council gets situated. So February, March, something like that, I think would be good.
Yeah,
Okay.
I think February would be good timing. We can, because we'll have a new school committee representative. We'll have one or two new city council representatives. And I think we want to give the president-elect time to get a little bit settled. So we can, I think we won't need to have CLA there for that. So I think we can schedule that early in January. Pick a date, maybe February, avoiding again school vacation week.
So the CLA meeting, April 8th, and then independent of that, we would schedule something for early to mid-February.
Yeah.
Yep.
Okay. Were there any other questions on any topics?
I got mine out there.
Oh, sorry to hold everyone up. Just had a quick one. Sorry that I meant to ask earlier. And Steve, this might be for you. This was just on, I think it was on the investment costs, just management costs of the OPEB trust fund and pension. So I saw there was only investment cost on one side. I know it's like 2.5 million overall. Percentage wise looks pretty good. I was just wondering there was no sort of fees for the OPEB trust fund. Is that not a managed fund, or was it just or were the two of them lumped together into one line item?
It is managed. I don't know how easily I can get that information right now. I may have to get it to you after, but there should be some fees associated with it.
Okay. Yeah. No, not something I'm like super worried about or anything. I was just kind of curious on that when I was going through the statements, and just saw that there was a zero balance there. So
Yeah, I think they're probably buried in the OPEB statement as opposed to more visible in pension. But for the period of October, there's about $6,400 in management fees. Calendar to date, about $138,000.
okay.
Yeah,
Yeah. I mean, that's not a bad ratio at all. Appreciate that.
you're welcome.
And I had a question too, curious I think for Steve. What are our intangible assets?
Zach?
I know in like the corporate world, it's like a trademark or something like that, but
Yeah,
because I noticed the number did not change year to year. So whatever it is, it's holding its value, but what is it or they?
so when I provide the capital asset information to CLA, I don't designate anything as capital asset. So that may be a question better left for CLA.
It was intangible assets. Yeah.
Oh, intangible, sorry.
Yeah.
I am trying to look it up. Bear with me just a moment.
Okay.
And you're looking for types, like what kinds of things are they? Not how much are each of them?
Right. Yeah. Right.
Yeah.
What types of things?
Yeah.
I'm wondering if that is your historic works.
Historic works meaning what?
Possibly paintings and books.
But those would be tangible, wouldn't they?
Maybe not from an accounting perspective.
Hmm.
I don't know.
Yeah, yeah, you can get back to us on that. I'm just curious. And
Let me get back to you on that. I'm
if
seemingly
nobody here
struggling
knows, I
pulling
wonder
it up
who
at my
knows.
fingertips. I can certainly get an answer for you on that one.
Yeah, Julie, it just there's a fair amount of detail in all of the city's capital assets. I'd say usually those circumstances, if they're not depreciating, it could be like related to some sort of easement that's owned where it's not tangible, but it's a right to use a piece
Ah,
of land or an easement that's not it's essentially perpetual, so it wouldn't depreciate or any sort of thing. That's the one circumstance that stands out. But as far as the specific detail, we can look at what we have. Just we're talking. It's yeah around even on the governmental side, like around 1,600 assets to look through. So just we'd like to we could get back to you on that.
yeah, that would make sense. I know we've got a zillion easements all over the place, so that would make sense. Okay. So I guess if there's nothing else, I think we can adjourn and see all of you in April and some of you hopefully in February.
Thanks, everyone. Really appreciate it. Thank you, Jim, Zach. Really appreciate it.
Okay.
Thanks, guys. Really appreciate
Thank
it.
you having us.
Thank you
All
for
right.
having us. Greatly appreciated. Happy holidays, everybody.
Yeah,
Okay,
take
bye-bye.
care.
Bye.
Thank you.